able to see that okay?
Yes, thank you.
My name is Barry Weber. I'm an audit partner at Ag Bailey. This is the second year we've done the audit for PCM, and I think we're up to 12 of the 18 charter schools in Washington that we actually audit. So I get to do these meetings frequently this time of year. So I was just going to cover kind of high level the kind of key points of the audit. I'm happy to answer any questions as well if anyone has any. So the audit is issued. The issue date, I believe, was January 29th. So you guys should have copies. I know Matt certainly does. It's on your portal as well that you can access from our. So it certainly exists. So the key point here in the first few pages in the independent auditor's report, this is really the only pages of the report that are mine. The rest of the financials are really the responsibility and the owned by the school. These handful of pages are the ones that really we own. And the key point for this year is that it is a clean, so it's an unmodified report is what we call it. It's a clean audit report, and effectively says these financials are materially accurate as audited. So that's really, there's a lot of kind of discussion here about the accounting principles and all that, but the key point is those first 3 pages effectively say that the audit is a clean report. The next section there is called the management discussion and analysis, and that really just covers kind of the key points of the year, key changes, the key financial numbers, as well as a little bit of discussion of kind of where the school's going, how it did during the year, kind of those points. So, obviously these financials are issued, but as we, look into the future for next year, those kind of things, this is really the opportunity for the school to tell your story as far as, where the school's going, how it did, what the changes are. Typically we'll update kind of the basic numbers, and then, whether that's, Matt or your team can kind of look through and say, okay, do we want to change some of the discussion, those kind of things, because this section really is meant to be your perspective on your financial statements. So if I would encourage you guys to read through any part of these financials, it would definitely be this section. It tends to be the most straightforward and easy to read. So that's going to be those 5-6 pages. And then you get into kind of the true financial statements. The charter schools are considered a component unit of the state, of the school districts, and so you do report under government accounting standards, which is going to be your general fund and kind of the governmental activities, government-wide. The kind of disadvantage that I tend to see in that is it does muddy things a little bit because we add things like pensions and leases to the financials, and they tend to skew things a little bit, make things look a little odd compared to what most people are used to seeing, and certainly what you're used to seeing on a monthly basis. So for example, you've got all these lease or pension balances here that really is just based on the state actuary reports. They do evaluation of where the pension is, overfunded, underfunded, and then that kind of gets passed down to every possible component of anyone that has pensions. And so the state just says, you, PCM, get 0.002% of the state's liability for pensions. So you'll notice there's just a lot of numbers, a lot of disclosure related to pensions. They tend to encourage most boards to kind of ignore those. The reality is we're just going to make our normal pension payments based on our normal contributions. We're certainly not going to, here's a liability of $123,000. We're not going to owe anyone $123,000 at any point. It's all based on the state actuarial valuation of where the pensions sit. So it tend to kind of tell you to ignore the pension amounts for the most part. As well as with the new accounting guidance a year ago, they implemented lease obligations, which effectively means we're in a long-term lease for our building, and they treat that like debt because it's a legal commitment. And so you actually end up putting, in your case, a $6.5 million liability on the books, as well as a $5.5 million asset is the right to use that building for the next 25 years or however odd years it is. So again, the accounting of that does skew things a little bit. Again, I tend to encourage you to review financials kind of at the fund level that would just show that as an outflow. We made our lease payment every month, and that's just our kind of normal expenditures. So this does kind of skew the numbers a little bit. If you were to look at the bottom here and you see a total net position, which is your quote unquote net worth of negative $1 million, realizing that $1 million of that is due to those leases. And so it's not really a true negative net position. It's just kind of the way leases are accounted for. The reality is, if we ever did need to get out of our lease, no one's going to make us pay $6.5 million to get out of our lease. So it's just something to keep in mind as you look at these. They are skewed a little bit via the leases and the pensions. I tend to encourage most boards to kind of stick with your normal monthly process, which is done at the general fund level for the most part, and then knowing what you've got in terms of capital assets, in terms of property, equipment, improvements, as well as what your long-term debt is, really just factoring those in. So this is your general fund position here, which is probably a little more of what you're used to. Again, this is August 31st last year. And if you go down 2 more pages, this is your general fund, your change in your general fund. And so that is kind of where you can see negative about 403,000 was where you were last year, which does include those debt service payments on that debt, as well as some positive loan proceeds of new debt. And so then that kind of takes out the leases and the pensions and stuff. So it's a little more accurate. The only thing that this doesn't really capture is all of your capital outlay for equipment, building improvements, those kind of things. So that's just kind of something you'll need to factor in. Those don't get kind of clearly, you kind of have to do some loosey-goosey math to kind of back your way into those by taking the different numbers. So I, again, tend to say value the financials that you're reviewing, because those probably show a little more clear picture than kind of the bean counter financials that we produce. The other kind of key pages I kind of want to point out, there's a lot of accounting policies here. I kind of call it accounting mumbo jumbo because I don't know many people that want to read through this other than yours truly. But the key notes that I'll just touch on is note 3 is going to be your capital assets. So that's going to be, I'll zoom in a little bit there. That's going to be your equipment. Leasehold improvements, some furniture and fixtures. So these are things that on your general fund are expenditures, but we do know they provide long-term value, right? Our leasehold improvements provide long-term value. Our equipment, furniture, that's valued much longer than the moment that we spend that money. So just knowing that, net of my depreciation, I do have about $550,000 related to that. And then the following, if I jump past note 4 is leases, but note 5 is my debt. And sure enough, I have about $550,000 of long-term debt as well. So knowing kind of those balance each other out, so my general fund balance sheet is probably going to be relatively accurate. But this, I think, is useful information to kind of see where our financing sources are during the year. You've got your beginning balances, additions, payments, and your ending balance, and then what's due in the upcoming year. All of the rest of the financials, I tend to skip over or encourage the board to skip over. A lot of pages are dedicated to the pensions, discussing how they valued the actuarial valuations, what their assumptions were, inflation rates, investment rates, all of those kind of things. It is quite long and quite detailed. You're welcome to read through it. I don't know many people that do. But again, those key points is just that you do have a little portion of that pension amounts on your books. And just knowing that is important as you read through those financials. Beyond that, the supplementary information, your budget to actual is going to be there as well. So your budget to actual for fiscal year 23, I tend to say that's relatively valuable there to look through. That's going to come from your F195 and F196. And ties back to the fund financials on these statements. So you can kind of see where the variances were during the year, where you came out ahead, where you were behind, those kind of things. The very last report at the end here is what we call our internal control room. And so as part of the audit, we do an analysis and audit of the internal controls of the organization. We do what's called test of design, which is where we kind of analyze, is the process a good process behind things like AP, payroll, cash receipts, revenue, all of those key audit sections, if you will. And so we'll say, is the process for who approves the payables and the board review appropriate, as well as payroll, as well as, when money comes in from the state, what does that process look like? Those kind of things. And we really just look at the process. We don't necessarily test a lot of transactions related to it for those controls. We just kind of look and say, is the person approving these things appropriate? Is there the appropriate design related to revenue and cash and those kind of things? So we did conclude that it was a no findings effectively. We say no material weaknesses, meaning it's a clean report. There are no issues that we saw in the internal controls that we would want to point out to the board. Typically, most common things we see on here would be related to maybe procurement of equipment or deficiency related who's reviewing what and whether there's appropriate controls, particularly with smaller organizations. It is difficult to have those several levels of review, so that's obviously Jewel provides a kind of a valuable piece there of different levels of review that can make sure the processes are being done appropriately. So we did do that analysis, and it was clean. I believe it was clean last year as well. So that's kind of the key points to the audit. I'm happy to take any questions if anyone has them. I'll stop sharing here. You guys have some more important things to discuss than the bean counters, but if you have any questions, happy to address.
Any recommendations? Were there any recommendations at all?
Well, everything looked really clean. Obviously our audit's really limited to the financial numbers themselves and the accuracy of them. But yeah, everything looked really good. We tend to adjust the leases and the pensions once a year for these financials because there just isn't a ton of value for you guys to see that constantly. But no, everything looked really good. I appreciate all the help from the Jewel team. Matt's fantastic, work with him and Bill a lot on the various charters, and they always do a great job of keeping the numbers clean, keeping the monthly numbers accurate. I know when the numbers they show you, when we have a clean report like this, which is really that we don't have any adjustments, what it tells us is the monthly financial information that you're looking at is accurate, right? And so I do have audits where we will end up having half a dozen adjustments where, maybe the payroll amount or the pension amount or the pension contributions weren't done right, or maybe some payroll, whatever it is, and we have to go adjust that. And what that tells us is the monthly financials that you guys are looking at are not correct, right? It might be a little bit off, but cause you to make a bad decision. So if we have a clean report, no adjustments, it means that those monthly financials that you're looking at are pretty darn accurate. Obviously, we test for materiality, so really small numbers might still be off. We audit that it's materially correct, but that is the good news.
Thank you. Any other questions, Barry?
I should know the answer to this, but will you remind me what is the fiscal year cycle that we work on? What's the start and end date?
September 1st through August 31st is the audit period. So those are the financials that we audited. September 1st, 2022 through August 31st, 2023.
Okay, thanks.
Yeah, and it just matches the school districts.
Any other questions? Okay, thank you Barry for giving us that overview and pointing out some pages that specifically would be helpful for us to look at, and for completing our audit. We appreciate it.
Thank you very much.
Bye-bye. So we are moving on to consider the 2023-2024 revised budget. And I don't know who's taking the lead in that.
probably gonna give it to Layla. We did definitely talk about this during the FC meeting, but adjustments have been made since then. And so I'll turn over to Layla and then chime in when needed.
And celebrate.
All right, so, so I'll leave it on the most important part, when we look at the budget, and kind of explain some of the background for the budget revise. So obviously the number one driver to our budget is enrollment. And when enrollment takes a hit, then we do have to reanalyze the budget and see what kind of cuts that we can make to be able to accommodate for that change. So we were already, I think we budgeted for 136, and in October, I think we had 120, so we were already under budget. And so the most recent, or under enrollment, and so the most recent drop in enrollment required the school to really, scrub the budget as much as possible and make some really hard choices. Because when we're this far into the school year, we've already spent materials, furnishings, all our big budget costs have pretty much all been spent. So that narrows down to the only cuts that we're able to make are staffing. And those are always very, very hard choices to make. And the other thing that we do when we go through this budget, which we did in the finance committee meeting further, was we looked at what we had projected the budget line for, and then where we were at in the school year to see if there was anything we could cut within a specific category. So we went through that entire process. This did require staffing layoffs to be able to find a sustainable budget for the remainder of the school year to run the model as outlined in our charter. So we did get it down to 31 days cash on hand. That's what's called the cash covenant that we need to have by the end of August. Now, the ideal, like what our measurement is based off of with the commission at this point, is that when you're in year 3, your cash covenant is supposed to be at 60 days cash. There is a provision for flexibility in there if the school can show that they're able to work towards 60 days cash in future cycles. So you can see that we sit at 31 days cash predicted for the end of the school year. We do, in this situation, have to use cash conservation measures, which means that we have to work with vendors. We did do this last year. The reason for needing to do that is because apportionment isn't the same every single month, even if your enrollment is the same every month. And there is, if I think I remember correctly, I think it's April or May that is like the lowest apportionment months, and then it jumps up again during the summer. So what we do with Jewel is we look at that, we look at cash flow, where we're gonna be at, and so starting now, when I had to do this, we start cash conservation measures, and we also engage in as much budget cuts as we can. Besides layoffs, for 2 staff, we did work with Gladish to get some budget relief with rent, but there's nowhere left to cut. So this does, again, it allows us to sustain the model for the rest of the school year. We will have to, obviously discuss with the commission. Draft has been sent to them. And we'll need to, and then we'll end up talking next about budget, like 5-year budget plans, and if there's going to be model shifts. And then I'll kind of leave it there so we don't get dragged into that discussion and just stay on the budget as it is right now. For this school year, so remember, this is this school year, that's it.
So, are you ready for questions?
Yes.
Some questions. You say we work with vendors. Have we like proactively reached out to some of our vendors so that it's
Yeah.
it is
Yeah.
expected?
Yeah, so we work with the vendors that we know will work with us. Others, they need the payment, in a given timeframe. But we do have vendors, that will work with us.
Could you tell us which vendors they are? That
I could give some examples, like
Yes,
Growth
just-
Partners has given us, some grace before, so we'd be reaching out to them. Some of our larger, where's Matt here? Some of our larger vendors, we would be, looking at working with if there was any, things related that were still outstanding for, material or furnishing payments, then we'd be reaching out to them as well.
And will, she said that the cash covenant is supposed to be at 60 days cash in hand in year 3, and we will have 31 days cash in hand by the end of August, which, does this budget, will it need commission approval?
So it shows up, and she can speak to this more, but, it's gonna get presented now because it has to be presented with the rest of the budget changes, especially if they require a change to our program, which would be a contractual change that we need to request. And we have already shared this with them and we'll stay in communication, but I don't think formal approval is the right.
Yes, we would need to formally
Yeah.
approve it.
Formally approve, yes, it will
Depending
go,
on the level,
Depending on
if
the
it's
level.
if it's a major change to the educational program, the full
Then,
commission would have to
yeah.
approve it.
Yes.
And then it's also possible, depending on the level of change, that it can be approved at the staff level. However, the approval is necessary and that would require an analysis, and it could be an approval or not an approval.
okay,
Yeah.
thank you for clarifying.
Yeah, but that's why, like, this budget doesn't have, changes to our program. That's what the effort to get this budget to 30 days cash or more was focused on keeping the program as is.
And this, has this, this budget adjustment, has this already gone to the commission, or is it waiting on us as the board?
The
Or-
draft has gone to
The
the
draft
commission,
has gone.
although I think there was another update that's been made recently to bring it to 31, so it would need to be shared again. I'm not sure if Matt has done that yet. I have to look.
Thank you.
Can I ask you, can you remind me again how you get that total enrollment number? Is that an average
Yeah,
over the year to date or the year for the full fiscal year?
so that assumption is the average FTE over, the school year, based on where enrollment was and where we're tracking now and where we're predicting it to be.
If enrollment continues to decline, do we end up just receiving less funding, or do we have to pay back? Like when we had overestimated enrollment?
So if there's so there's two different ones. Our budget, so the payouts right now are gonna be tied to the enrollment that we submit, each month on our count date. And so, you know, if we were at, 88 on March first, that's what the, payment is tied to. What you were talking about when they did what's called a true up, that happens once a year and that happens in February. That is truing up based on what you predicted you budgeted amount. You called it out in August that we thought that we were gonna have 136 students. And we keep reporting enrollment, right? But then they true that up if we're off the 136 in, January.
How many are currently enrolled?
It was in the board dashboard, I think it was
88 was in the board dashboard. So how did you get to the number of 106?
So total enrollment is the average that you get across each one of the months.
So that's the that's the average from, August through February?
Through
Or are you
August
predicting it through end of school
through
year?
June. So like you have to predict the last, you know, we're at 3.5 months. So you predict the last 3.5 months with, a number that's usually based like around your current enrollment. So if it's 90 or 88, that's what you put in there. Does that mean?
It does, but the 106 just seems too high. And I
So
haven't
this
done the math.
Matt's table is pretty extensive. Aubrey, is there a different way, because Matt went through and explained this at the finance committee meeting, is there another way you could think of to explain kind of the average?
I'm thank you for eating my dinner. No, it might feel maybe a little high, but, I haven't checked the numbers myself, so that's something I can definitely take a minute to do and just calculate the average, of what we're predicting, but this is what we're predicting the average. I mean, we've been in school since September, October, November, December, January, February, and have March, April, May, June left, so we're like a little over halfway. So that is the prediction of like if we kept enrollment the same as it is currently, what the average number would be. We've had it over the years.
Okay.
And I was looking for, it's a pretty large table off to the right, but it's only in the 5-year budget projection, it's not in, the single year.
This is the action item of just like double checking those numbers.
Yeah.
Thank you, Aubrey. Do we have any other questions for, the reworking of the PCM 23-24 budget for the rest of the school year?
What was the budget based on for enrollment that you sent to the commission July 10th?
I don't know if we can answer these, because the people in the chat aren't able to ask questions.
Right.
I'm-
So typically, we don't take questions from,
She
people.
just asked for questions. I asked a relevant question.
No, I was asking our board members for questions.
I wanna know. So
Okay,
you're telling me that you guys can't tell me what the amount was?
No, I'm not saying that. What I am saying is that we have public testimony, and then you can ask, then you're welcome to send that question in, but the people in the chat also aren't asking questions. This is how we always run our board meetings.
Well, that seems to be a problem.
And I'd be happy to, take that for consideration for another time. Please, send it in to us.
would just like to comment that we can have these discussions at the town hall meetings with the full board, that would be wonderful.
Yes, we can have discussions then, thank you. Okay, any other questions? And so, let me see.